being the #1 FTMO ranked trader, being on the FTMO leaderboard over 100 times.
When I joined social media and people were like, do you know this and do you know that and do you know that strategy and do you know this person? I was like, no, I don't know anything. I don't even know what you guys are talking about. Like, for instance, smart money concepts, ICT, these terms, they only exist in the YouTube bubble. Outside that YouTube bubble, I've never heard about these terms at all, right? I didn't even know this existed.
What happens when you put a proven 1-minute time frame trader in the same room as a proven higher time frame fundamentals trader? And that fundamentals trader does not believe M1 trading works. Let's see how this goes.
With supply and demand just by itself, you can be consistent. But the results are still somehow random in terms of you can be consistent, yes, but you can still have losing streaks. And for a beginner or someone who is like not that experienced, it can be really demotivating. And that's why people start strategy hopping. They have like 5 losers, they're like, it doesn't work for me, they move on.
And it's important for everyone to realize there are certain things in our control and out of our control. And if you try to control the uncontrollable, that's where you're going to lose your psychology and lose your mind and jump from strategy to strategy.
My goal as a trader is to find the best opportunity in this particular week for a particular market. In one week, it might be gold. Another week, it might be euro dollar. And another week might be the equity indices. Like now, I'm looking to buy soybeans.
Because you mentioned the Muay Thai and you are, a man in shape, you can fight it. Let's say one day there's a trading influencer, boxing. Would you participate? And if you did, who would you challenge?
If I had to challenge somebody, I would challenge.
Ladies and gentlemen, we are back for a special episode. And just to give you a bit of context, there's very few traders that I truly respect and look up to, and they have my admiration. I'm joined by a gentleman called Bernd from Germany, also now living in Dubai, who is one of the few people that does have my respect. And when we went for lunch not too long ago, we discussed everything trading related, our careers, how we grew in the trading industry, life of a guru, and that side of the industry which Bernd wasn't so familiar with because he was away from social media. But just going through his trading style, almost grilling you, assessing you, let's say, and then also him showing me his track record, my FX book, and just the level of expertise you have. Yeah, man, I'm excited to join you on this episode, and thank you for coming on, and I think we'll have a great chat.
No, Waka, thank you for having me. I mean, I really want to stress that, you're such a big trader, you're such a big influencer, your channels are much, much bigger than mine, and you basically having me, you don't have any benefit from having me, just having a good conversation. So this speaks volume, I think, and tells me a lot about your character.
No, but the purpose of the podcast is not big names, it's cool people that inspire me. That was the mission statement.
Thank you so much.
So it's definitely cool to have you on. So before we get into the nitty gritty, I just wonder if you can give me a brief introduction for the audience on your trading journey, what kind of trade you are, being the #1 ranked on FTMO. So that's a huge milestone, but you were not from the prop firm background. So just a quick outline of your story until now, 2024.
Yeah, I try to keep it short and quick. So my name is Bernd. I'm originally from Germany, but I live in Dubai since 13 years. I trade since 12 years, and since 10 years I'm trading. So since a decade I'm trading full time. I have family, I have a wife, I have a daughter, she's 9. So I'm providing for my family since almost 10 years now. And I don't consider myself an FX trader. I would consider myself a multi-asset trader. So I started trading stocks, then I moved into futures, and then only a couple of years back I started trading FX as well. So I trade multi-assets, so basically everything. And just recently I ventured into prop trading. Actually, it was in August or June, July 2022, so 1.5 years back, just by coincidence, basically. And yeah, ever since, the rest is history. I became the #1 all-time record holder for FTMO in terms of leaderboard appearances, 120 times. I think at least I'm the only one in the FX prop space who is managing a $2 million A-book account. We can go into that later as well. What is the difference between A-book and B-book, going into the nitty-gritty. But that's me in a nutshell. And since actually 2019, I'm also the owner of a licensed investment consultancy in Dubai that is regulated by the UAE authority. So yes, so that's me in a nutshell, my trading experience.
Oh, incredible, man. And I was actually going through your YouTube channel, and I know you're not an influencer and you just started your social media journey, but I think you're going to blow up, man, because you have good content, you have credibility behind you, and I think your daughter as well, she's going to be a star one day. She's in the day in the life vlog, she's a funny little girl.
So yes, about my YouTube experience or my YouTube journey, I started YouTube basically now in February, end of February last year, so now 11 months. And yeah, this changed a lot for me, like going more mainstream and more on social media. I was never a social media person. But now, since we are going more mainstream, me and my team and myself, so with a licensed investment consultancy where we provide education, it's like the social media game is a totally different ball game. And yes, my goal is to reach 100K subscribers because my daughter, she desperately wants a play button. She's 9. She can only talk about play buttons, that when she gets one, she wants to have it in her room. So that's my goal for her.
Brilliant. Now, I was going to actually ask, because you've kind of done the trader's journey in an ideal way. You were a hidden man behind the scenes. You didn't rely on prop firms, and you've been doing it for over a decade now. Why have you decided now to come out of the shadows, let's say, and put yourself online? And what is your mission statement with even doing YouTube videos and so forth beyond play button for your daughter?
Yes, basically, almost like everyone who goes on YouTube, well, let's be honest, we want to promote ourselves, right? And that's why I went into prop trading the first place, because for me this was, when it comes to trading, everybody can talk about trading, everybody can offer something about offer trading education, and the problem is that there's no real credibility and transparency in the trading industry, and there's so many, like you said in the beginning, there's so many trading gurus, and it's so hard to find the needle in the haystack, especially for people who are like beginners, who to trust and who not to trust. And the reason why I went into prop trading in the first place and then on social media was basically, for me, prop trading was like passing a driving license, so to speak, because you get all these certificates. So for me, that certificate was like passing my first FTMO challenge and then passing my first FTMO evaluation and getting the first payout. These were like basically a driving license for me to offer trading education and to showcase that I'm credible, and then that I can be the needle in the haystack for beginners, right? To know who to trust, if this makes sense.
Yeah, completely. And I want to get your summary or debrief on the industry, because you've grown as a real trader outside the bubble of social media, which is the Wild West. Now you've seen the chaos on Twitter, you've seen the Lambo flexing on Instagram,
insane.
all of that. So now coming from a professional corporate background before you started trading, and then doing trading correctly, to now peeking into the Wild West of social media, what has been your assessment, and why do you think it is the way that it is?
Well, I think we could fill an entire podcast just talking about that philosophical topic. But yes, most people are there, right? At the end of the day, let's be real. They're on social media because when it comes to trading, the easiest way to make money is selling stuff.
Selling a dream. Yeah.
Selling the dream, right? How do you sell the dream? If you show off all these materialistic things like Lambo, expensive watches, traveling, the lifestyle, basically the trader lifestyle, right? How it's promoted on social media. And it's very attractive for people, especially for the younger generation. And this is what I see constantly now on social media. It's insane. It's still, like, for me, it's like mind-blowing how some people, well, can blow up so big on social media by promoting this kind of lifestyle, but don't really have proof that they are legit traders. Entertainment aside, yes, but literally like promoting that they are good in trading and they're consistent in trading. That's, to me, literally horrible to see that. And there were so many, when I joined social media, and people were like, do you know this, and do you know that, and do you know that strategy, and do you know this person, and what about this? I was like, no, I don't know anything. I don't even know what you guys are talking about. These terms, like, for instance, right, we don't need to get into that discussion, but for instance, the term smart money concepts, ICT, these terms, they only exist in the YouTube bubble. Outside that YouTube bubble, I've never heard about these terms at all, right? I didn't even know this existed outside the YouTube bubble. And I had mentors before, and my mentors were from Chicago Mercantile Exchange, one from New York Stock Exchange. So I had like really old school traders who were former floor traders as mentors. This is a completely different world, right? And then you join that YouTube bubble and you're getting bombarded with all these fancy
lifestyle.
And these terms that you're like, what does this even mean, right? So, yeah, so it's for me now a completely different world, and it's very interesting to explore. And actually, to be honest, now I really enjoy YouTube as well.
You got addicted to the numbers and the growth, and
yes,
I completely get it, bro.
Yeah. It's YouTube Studio app, checking, on the video.
Refresh.
I
refresh my MT4. I refresh my YouTube Studio, actually.
That's so funny that you say that, because I told my editor the other day, I feel more anxious releasing a new YouTube video than getting into a new trade,
Yeah. So I wanted to kind of reflect on what you've just said, and my assessment on that same thing is, why is the industry so chaotic? And I do think about it a lot, because it's usually young men that are getting roped into it and misguided. But there are a few people around, like yourself, that are somebody worth listening to, learning from, but they get lost in the lifestyle. They get lost in who to learn from, and usually who they want to learn from is the one with more followers, the one with the nicer car, as opposed to the one who's shown credibility and validated themselves. My assessment has kind of been the biggest scams come when you have the lowest barrier to entry. So trading, you can start for free. You can get a broker and sign up with $100, MT4 download free, and you don't even need qualifications or anything. Barrier to entry is super low, but upside profitability can be a multi-millionaire, whatever. So when you have infinitely low barrier to entry and infinitely high upside, that's the space where people try and sell a dream. And that's the issue. So you've mentioned you had not the mentors in the space, not social media mentors. You had true mentors that were working in funds, I guess, or in the professional environment.
On the floor, actually. On the floor.
Actually,
they were
floors,
like,
okay.
One of them is actually, frankly speaking, one of them unfortunately died last year. He was a former floor trader, right? So he came from the floor, and since floor trading is a dying species, or is basically died out, right? Everything is electronic nowadays, the systems. These people, because trading at the end of the day is a lonely business, so they were looking to basically continue to speak about trading, talk about trading, get exposed with other like-minded people. How do you do that? When you start teaching, right? And this is how
I wanted to ask, because I think it's one of the most valuable lessons for the viewers that are watching, because they're usually going to be young newcomers into the industry, and they want to do well. They have good intentions, but they get misguided by the industry, the people in the industry, the tricks of the prop firms, and there's so many pitfalls.
It's crazy.
Whereas you took a route to profitability with a correct way, let's say. But not everyone can have access to a floor trader or these kind of mentors. So, well, first of all, how did you access these kind of individuals that mentored you, and those mentors that are in the floor environment in a fund setup, as opposed to you as an individual trader trading personal plus prop capital? Does that information translate across? And were those mentors directly correlated to your success, or was it kind of an individual journey you had to go on over the last decade?
Yeah. It's a long story, but I just wanted to add something that you mentioned previously that is basically super interesting to me as well, that when it comes to the social media space, is that what I realized is that the amount of followers equals credibility, or for the newcomers, right? Or the amount of money that you have apparently is equals credibility in trading, which is absolutely not true, right? I just wanted to add that because I realized it as well on social media. But yeah, that's a difficult topic, what you just mentioned. And for me, I can say back in the days, more than 10 years ago, the trading environment or the trading education space was different. It was more like there was no YouTube. I mean, there was YouTube, but it was like minimal, right? I didn't even think about going out and look for educational content on YouTube. I come also from a university. I studied. I have a university background, a business background. So for me, it made a lot of sense that that trading is another business, is another skill, basically. So if I go out there and just try to figure it out myself, watching content myself, and just being by myself, I can never master that skill. I can never master that business. That I need to find someone somehow to teach me that skill. Ideally physical, because I had to go to university. I was taught physically in a classroom environment. So I come from a background that I always had classroom environment, right? So I just had the same. I basically applied the same approach, my background approach to, okay, I want to learn trading. So how do I approach this? The same that how I studied business, basically. I need to find someone who I can like physically learn from. And this is basically how I was doing back then, was doing my research, right? And then found somebody, and this is basically, I kept the ball rolling. But today, since everything, today you can learn online. So today you can learn online. But still, you have to do your due diligence, and you have to do a lot of research to find somebody that is trustworthy. And I think that's why we're coming back to the prop space. That gives you that prop trading potentially gives you the credibility, because you can collect all these certificates, you can get all these payouts, you get that's why I say potentially. There's
but it's kind of like a step in the right direction.
A step in the right direction. If somebody can showcase consistency, certificates month over month, different, more funding in general. So this is a way how people can go by, okay, this person apparently knows what he is talking about or teaching about and trading. So this is a way how you can start at least, right? Start at least, differentiate and find the needle in the haystack, from my point of view. But yes, as you said, as you indicated somehow, there are also there's some tricks and downside tricks that people nowadays do with the keyword here is obviously like I lost it. It's
what is the perception?
The reset button that you have with prop firms, right? The account flipping, that was the word that I was reading, the term, the account flipping that you nowadays can do. You can buy 10 challenges and get 2 payouts, and then you can invest the money that you get with the payouts and new challenges and so on. So it's difficult, yes, still.
So in the beginning, or in the vlog section, we kind of said that our goal in the market is to make money.
Yes.
So it doesn't matter what strategy, it doesn't matter who's right, who's wrong. Our goal is to make money. And as long as you are profiting from the market, it's kind of like you are right. Who cares? So
exactly.
When it comes to the prop firms, and I know from a professional environment, it is kind of like, well, you have a reset button, so that's not real. And you can also do the risk to reward of the prop firms, meaning you spend 10,000 in challenges, but you get 20,000 in payouts. Well, you made money, but you didn't need to be a consistently profitable trader, because your equity curve can look like this. The down periods, you blow the accounts. The up periods, you take a payout, and you just gamify the situation. Which in some elements is like, well, you're not a real trader, you're not professional, you're just gambling with an edge. And the other side is, well, my goal was to make money. I used the opportunity in front of me and I made money through the markets. That's my goal. So what does it matter? So where do you lie in that?
Yes, I say it matters because now I tell you also why it matters, that I'm more like, I don't like that slot machine approach, that account flipping approach, that where you use the reset button, because I offer education, right? And so I offer education, so I want my students to learn how to trade consistently, right? To be consistent for the rest of their life. I don't want them to learn how to flip an account, right? Because this only requires a certain level of skill and only a small amount of edge. Whereas if you can prove consistency month over month over month, this needs you need to have an edge in the market, whereas this account flipping style, the slot machine style, doesn't require a lot of edge in the market. So I'm offering education. So I want to showcase. I want to be a role model in the market. I want to be a role model in the market. And I think if you offer education and if you do this account flipping kind of trading style, and if you I've seen a lot of people glorifying this on social media, which is absolutely wrong. They offer education and they're glorifying this gambling, slot machine kind of style, glorifying account flipping, buying 10 challenges, they're lucky getting two payouts. That's not the way to go if you offer education. If you trade for yourself and only for yourself, and you don't offer anything, right? If this is your approach to make money, and if you can pull it off, okay, making money is making money, right? But if you are on the education side,
you have like a responsibility.
You have a responsibility. You have to be a role model.
I like that answer. So now I wanted to get into the FTMO side of your journey. I know that wasn't the main and probably not the area where you've made the most money, but it's still like a very huge achievement. And that's kind of what's brought the industry's attention to yourself, not your A-book stuff, not your individual journey. It's the prop firm certificate.
Because it's the biggest prop firm in the world, right?
It's the biggest prop firm in the world. You got a huge lifetime payout. And also the idea that you can't fake that.
You can't fake
Even
that.
if you show like a MyFX book, someone's going to say, oh, but you did this and this. You tricked
Mm.
it like this and this. But when it's an FTMO and you got the QR code, which let's not get into that drama. I don't know if you want to. But
we could. Yeah, we don't get into that.
yeah, but the point being, like,
yeah.
it's third party verified, let's say, and they know you can't have a hand in manipulating it. So when you were trading the FTMO, and it's been like a year and a half, if I'm correct in saying,
Yeah, August
that year
2022.
and a half, you were able to rank on the leaderboard 120
20
times.
times.
Huge amounts. So when you were trading that account, were you trading it as you trade your normal, or were you trading it in line with, this is a prop firm and I can be a bit more carefree or a bit more risky, or I want to be on the leaderboard, so I trained a bit more aggressively? Or was that just your normal performance?
It was my normal performance.
Wow.
It was like my normal risk profile, taking 1% per trade, or 1.5% max per trade. That my normal risk profile. But back to the MyFX book, I'm not sure if this is correct. So the audience then in the comment section can improve me if I'm wrong. I think if you trade with MT4, because MT4 can be manipulated, but MT5 cannot be manipulated anymore. I'm not
Maybe
100%,
so,
I'm
maybe
not
so,
100% sure.
Yeah.
Maybe the audience knows
I think
better.
basically
but,
it comes down to, people say that you can buy a broker or white label a brokerage, and then you put in whatever in the back end, and MyFX Wick is going to verify that broker statement.
And that apparently works with MT4 only. Apparently,
Okay,
yeah,
interesting to
apparently.
know.
But maybe the people
I mean,
know better.
that's the
Yeah,
thing,
I'm
like-
also not into that, like, deep, because I would, to be honest, like coming up with that idea, like getting yourself a broker, manipulating the data.
Well, Bernd, you'd
how
be
much?
surprised.
Yeah, but how much? Like literally, how much evil is in this
Yes,
world?
yes, yes.
Like how much evil to have, like just this idea to do that. How much evil must be inside
I think it
you?
also
Horrible.
speaks to how unlike, or how few are actually profitable in the industry, because
Yeah.
people go to such lengths to do all these tricks and manipulations, as opposed to just spending a couple years learning the skill set and growing accordingly. But yeah, that also speaks to how hard this journey can be, and the
hard.
journey of a forex trader or a
In
multi-asset trader.
in general, a trader.
So
as
in
well,
your
yeah.
journey, when you were specifically on the prop firms, because I think that's the most relatable
Yeah.
angle for
Yes,
the
yes,
most.
100%.
I saw when you were on the leaderboard, at times you had like 20%, 30% in a month, like huge returns for a
Yeah.
month. What would you say for a newcomer or somebody who wants to be consistent over time? What are normal targets to have in terms of
Yeah,
what is
it's-
normal risk management, profit,
Perfect
growth,
question.
all of these
Perfect
kind of
question.
things?
Because what I teach and what I live by is by looking at not necessarily in percentage growth, but in risk to reward, right? So what I when I take a trade, usually I don't go by percentage. I go by the fixed dollar risk.
Okay.
Right, so
Monetary amount, yeah.
monetary amount. So I define my R. Usually, then in this case, it's like based on my $1 million account, it's $10,000, which is 1%, obviously. So that $10,000 though, that's my 1R, right? And what I'm trying to achieve is my KPIs. So there are only two KPIs basically, but the most important KPI, key performance indicator, is risk to reward, right? It weighs so much more than win-loss ratio. We know that 50-50 we can still be highly profitable. So, but my only KPI basically is risk to reward. So what I would like to achieve per month on average are 2 Rs. That's also my target. The target that I give to every student that I have, because 2 Rs is really a realistic goal and achievable. So if you achieve 2 Rs per month on average, so 24 Rs over a period of 1 year,
Yes.
right? So if I trade that $1 million account, $10,000 risk per trade over a period of years, 24 hours, multiplied by 24 is $240,000, $250,000, $250,000, right? So that's my goal. So, and if I can achieve this goal, I basically have proven to myself I have achieved that target. I'm now allowed to give myself a raise, meaning I can get more.
your risk.
I
Okay.
can increase not necessarily my risk, but I increase my funds.
Okay.
I increase my funds
You
because
maintain the 1R.
I maintain the 1R exactly,
Okay.
but I can increase my funds because with prop firms this is now pretty quote unquote easy to increase the funds. So basically you increase the funds. You still now having a $2 million account. I'm basically now increasing also. Well, it's that 1% is now basically $20,000. So I
Yes,
take like
yes.
$20,000, which is basically 24 hours. It's like $500,000 per year on average. If I've achieved that, I'm allow myself basically to, because that number game is really important from a mindset perspective, because we have to all get used to bigger numbers when it comes to trading, right?
So do you think in dollar amount or do you think in R, and then you don't get
I think in
influenced
R.
by $20,000 loss?
Exactly, and this is what I'm trying to do. I'm getting away from the monetary approach to the KPI process approach, because I realized for myself, if I think in dollars all the time, my trading sucks basically. But if I think in process-based trading and in R's, then it's like I'm not so stressed. I'm more like relaxed, and I can really focus on achieving these KPIs versus always running after the money.
So on an annualized basis, I get it. You want to kind of do 2R, let's say 2% per month, and therefore get that kind of gain, which is definitely beating the market, but it's not outlandish. That is like, how is that possible? It's very achievable.
Yeah.
But how do you modulate that on a month-to-month basis? For example, let's say you have a losing month, or let's say you have reached your 2R for the month. Would you stop? Or
No,
would you
I would
continue,
just
or-
continue. Yeah, I don't so I have to consider myself now, since I'm in a social media space, I have to classify myself. Before that, I never classified myself. I was just a trader, multi-asset trader.
Yes.
Now, once I got into the social media space, everyone asks me, what kind of trader are you?
A strategy, yeah.
No, more like, are you a scalper? Are you a day trader? Are you a swing trader? I'm like, okay, then in this case, I consider myself a swing trader because I'm trading higher time frame. So my execution time frame is daily time frame. So I have now to classify myself. So I'm a swing trader, right? So since I have maybe 1 to 2 trades on average per week, there might be a week where it depends what the market gives me. There might be a week where I don't have any trade, but then on the next week, the market gives me 2 opportunities. So I take these 2 trades. So on average, 1 to 2 trades per week. So I would always, so if all my rules are met, I would always get into a trade, because it's like a very high probability trade. So I would never not take that opportunity, if this makes sense.
When it comes to KPIs, I completely understand it. And I want to ask a question orientated around that, because everyone has to optimize their system for something. It sounds like you're going more for the risk to reward. And it's important for everyone to realize there are certain things in our control and out of our control. And if you try to control the uncontrollable, that's where you're going to lose your psychology and lose your mind and jump from strategy to strategy. So we kind of have to be okay with things out of our control, like the market. The market's going to do whatever.
100%.
But these things in our hands, in our control, we should optimize them and be very intentional.
100%.
So if I'm to list them, and I want to ask you about these controllables, we have our risk to reward, we have our win rates, we have our trade frequency, we have the number of assets we can potentially trade, and then also overall growth potential targets, and maybe cutting off and so forth. And the way I kind of think of it in my perspective is I'm spinning plates. And let's say this risk reward is not doing well. Okay, I need to go back and spin it to make sure it doesn't collapse. So I'm kind of all over the place to recognize where my attention needs to be. But in that sense, I also have my KPIs. So I know I want to keep my win rate within 45 to 55%, because I know that if I go on a higher win rate, which I can, I just pick higher quality setups.
Yes, exactly.
I spin the win rates plate too much, and it's not needed now, because if I have an 80% win rate, it means my trade frequency is falling. And I want to have not one trade a month. I want to be trading at a good frequency with the average win rate and maximizing for risk reward also. So when it comes to your distribution of these plates, let's say, which ones are you focusing on? It sounds like risk reward. And where do you maintain all of them? So trade frequency is like 1 or 2 per week, you said?
1 or 2 per week.
Your risk reward, you want to keep it at a 1 to 2?
Yes,
position?
like at least 1 to 1, 1 to 2.
Okay.
It depends. It could, but nothing more than 1 to 4.
Okay, and the other one is your asset selection. So for example, I just picked 2, Euro
Exactly,
USD and GBUSD, whereas yourself, I like your system, so I want you to talk about it, because it's not something I've seen many people do, which is, in my perspective and also preference, I would say, I don't like to be looking all over the markets on multiple assets, let alone just the majors, because you're also looking at commodities, you're looking at all over.
I look everything, even agricultural markets.
So from my perspective, it's like, because I'm a technical base, I just need to find good opportunities on my currency pairs. Whereas your primary building block is the best fundamental opportunity.
Exactly.
And therefore, based on the week, some asset will have a better opportunity than others.
I like your description a lot. Yes.
So can you talk me through your selection process on, because it seems like on a Sunday, let's say, you start your trading week by looking at the best opportunities across multiple asset classes. So let's talk about what those asset classes are and how you are selecting it before you get into the week.
Yeah. I like your description a lot, how you describe the system basically, that my goal as a trader, is to find the best opportunity in this particular week for a particular market, right? And it might be in 1 week, it might be gold, and in another week, it might be euro dollar, in another week, it might be the equity indices, but in another week, like now, I'm looking to buy soybeans, right? So we talked about this, right? But you can trade soybeans now in a lot of prop firms as well, like FTMO. But again, that's another topic. But for me, yes, to describe basically my process is on the weekend, this is where I do my analysis. So I have a 2-step mechanical process. Step 1 is looking at the fundamentals. And not only I, this would be a lie, my team and myself, we developed fundamental indicators, right? So these are proprietary tools that we use to basically get a fundamental bias. So this is my step 1 in the 2-step mechanical process. So we're looking at...
Just to clarify, indicator, I know the word means lagging and past, but yours is not an indicator, let's say.
Yes, because indicators, right, when people hear the word indicators, they know the normal indicators, the conventional indicators like RSI, Bollinger Bands, moving averages. So all of them are derived by price. But price is... they're lagging. Why? Because price has to move first for them to move, to follow, right? So metaphorically speaking, you're always late to the party because price has to move first, right? That's why I'm not saying they don't work. They work indicators work sometimes, like any system works sometimes. The question is just, can you achieve consistency, right? That's always the goal. Do you want to make money sometimes, or do you want to achieve consistency, right? So I leave that question.
My
out
comment
for
on
the
the
audience,
indicators is the analogy of a clock. If my watch is broken at 6:30 and it just doesn't move, well, twice a day it's 6:30. So even a broken clock is correct twice in a day.
I like that analogy. That makes sense. I've never heard that analogy, but I love that. I will take that in the future as well. I'll copy that from you.
But the indicators are lagging, and the way I kind of look at it is there's 2 issues I face with indicators. Number 1, they're lagging, you're late to the party, as you said. So what I read from that is if you can just read price, these are kind of supporting you. It's like when you're learning to ride a bike, you have your training wheels. The indicators are there to guide you, support you. But once you know how to read price, you don't need them. Second of all is that what is causing the market to move? Well, causing the market to move, there's let's say 2 bases. It could be the way I look at it from a technical edge, which is liquidity is the fuel of the market. So when I'm seeing forms of manipulations and all of that, that's how I'll guide my technical entry. From your perspective, it's more like, well, what's driving the asset class is fundamental bias and so forth.
Exactly. Fundamentals drive price on a higher time frame.
Correct. Yes. And if there was no fundamental drivers, price would just be flat.
Exactly.
Like
100%.
Fundamentals is the reason price moves.
Exactly.
And I feel technicals and runs of liquidity are the vehicle to enable that move.
Yes.
But the indicators
100%.
therefore have no purpose. Because this is a causative factor, fundamental causative factor. Runs of liquidity and primary drivers of price action are causative factor. Indicators are correlation. They're just representing these 2 sides of it. So your custom-made tool probably is a more
so I would like
word.
to call it forecasting tools because they give you glimpse into the future, literally, right? They give you glimpse into the future.
How does that build, and what does it actually do for you in your 2-step process?
Well, it gives me a fundamental bias, basically, whether I'm going to be bullish, bearish, or neutral in a certain market, right? And then if I'm neutral in a certain market, I completely stay away from that market because it's like it gives me contradictive information. So I'm not trading it. So if I'm bullish or bearish, then I go to my step 2, where I use technicals to time the market. So fundamentals are lacking in terms of market timing because it just tells you the market's going to move in a certain direction, but not when, and not where, right? Well, it can tell you when, but not necessarily where, and it's difficult with fundamentals, where to place your entry, where to place your stop loss, right, and where to place your target. It's hard to define with fundamentals. So that's why I need to go to my step 2. If I'm bullish or bearish fundamentally, then I use technicals as well. And I use supply. I think you use also supply and demand, right? The original supply in demand. There are a lot of
Rip-offs,
spin-offs, rebranded supply and demand. But I think I've seen your screenshots on Twitter, the trade ideas, the signals that you post. So I can tell that you also use the original, supply and demand strategy, which is great. So I use also, I would say, the original supply and demand strategy. So, and this is what I use to basically then time the market to where can I place my set, basically my entry, my stop loss, and my target. And during the weekend, yes, just to because you asked, so how do I do it? So for me, it's pretty easy and quick. I go through all my markets, maybe it's 30 to 40 markets that I go through, but I just look at my fundamental tools, right? And this goes really quick. It takes me maybe per market 1 or 2 minutes.
This tool is it's not giving you a report of the data. It's taking the data and building a graphic representation.
Exactly.
For you.
So these tools look basically like your conventional RSI. They look like your conventional almost moving average and stuff like this. So we made them in a way because fundamentals in general also are perceived being subjective, but we designed them in a way that we can plot them on the chart and being objective to us at least, right? So we have an objective approach to these fundamental tools. And so I can quickly go to a market, give me a market, we can look at the chart, and I can tell you whether I'm fundamentally bullish, neutral, or bearish within like 1 or 2 minutes, and then I know if I'm interested in that market or not. So that entire weekend process going through these 30, 40 markets, for myself, takes me 30 minutes max. Right. And then I know what I expect for the week ahead. And that's it. So my entire trading week, literally in front of the screen, if I'm not just staring at the screen, because I'm passionate about trading, I love just watching candles. I mean, you most probably as well. Like you're addicted to that stuff. You know, during the weekend, I find myself just opening TradingView and I'm like, why did I just do that? The market is closed. Because you're just so addicted to that stuff. But just the whole trading process is maybe maximum an hour in the entire week. Right.
Okay, so there's so many things that I want to jump into just based on what you said.
We can do 2 episodes.
We probably should, but I think the way I want to take the rest of the episode is these 2 steps that you have, which you've kind of made objective, but not totally, where you have the fundamental portion and the technical. So let's start off with the fundamental portion. Initially, because without your tool, which you developed later on, were you always fundamental base? And if you were you then trying to read reports and all this economic data on every currency pair and asset class and soybeans and commodities and precious metals?
On soybeans, I had like the crop report, for instance. So
you would manually read it back in the day?
Back in the day, I was reading the crop on these agricultural markets. I learned how to read these crop reports and analyze these numbers. So this is how I did it. And then when I slowly incorporated indicators, it was like 1 by 1. And then we slowly developed our own tools one by one, basically. So it was like a process as well. But also in the very beginning, I started off just with supply and demand. Okay. And what I realized is when I was just sorry. I know you want to. What I realized is that what I'm now better at is my consistency and my results are not so random. Yes, you prove it with supply and demand just by itself. You can be consistent, but the results are still somehow random in terms of you can be consistent, yes, but you can still have losing streaks, right? When you have like 20 trades, you can have like 5 consecutive losers, and then it's not like if you have a 50-50 win rate, it's not like winner, loser, winner, loser, winner. The market doesn't work that way, right? So you can have like these losing streaks, and for a beginner or someone who is like not that experienced, it can be really demotivating. And that's why people start strategy hopping. They feel like they don't have that experience and they have like 5 losers. They're like, it doesn't work for me. They move on, which is like, hey, you need practice. You need like experience. You need like a proper sample size to really evaluate whether it's, but so only we can talk about this stuff.
This point exactly is mentioned in the book, Trading in the Zone by Mark Douglas, where he speaks about that if you have, which is important, if you have a proven edge and you've got the data to support it, when you go into the market, there's a random distribution of your wins and losses.
It's a random distribution.
It's not going to be win-loss, win-loss. Exactly. So if you're going through a losing period and you know you have a 50% win rate, out of 100 trades, you'll lose 50. What if 30 of them are in a row? Exactly. Your strategy didn't fail. Nothing went wrong. It's just your distribution came different and that affected your emotions. But to the point of your fundamentals, you have your leading indicator, which kind of sped up the process of you having to manually read reports. So let's talk about in the context of FX, your leading indicator of the fundamentals, when it's saying, let's say this currency pair is bullish, what data is it taking to then build this report for you? What is the key fundamental drivers that you consider in your report?
There are multiples. it's always the same tools that I'm looking at, regardless of market, regardless of asset class. However, some markets I focus more on one tool, and other markets I focus more on another tool. Like for instance, when we compare, and that's a good example, I think, equity indices versus gold or versus euro dollar. So when we look at equity indices, my focus is heavily on seasonality and market cycles, like election cycle right now. We are right now in the market is moving based on election cycles. So that elections in the election cycle, it's a 4-year period, right? So there's pre-election, election year, post-election, and midterm election. So right now we're in the election year, US election cycle, right? So based on and then I'm looking at election cycle seasonality basically. Plus I'm looking at valuation versus the interest rates. Plus, on top, I'm looking at COT data, some derived COT data, how the retailers, and which would we consider the dumb money in the market, because if we look at our tools, we can always tell the retailers are always wrong. So that's so the biggest learning is that if you look at these tools, if you see the retailers on one side, don't trade with them. Always trade against the retailers. They are 90% of the time wrong, regardless of market, right? And then we're looking at smart money, which are we call, based on the COT, are the producers. All right. So now and when we look at, as I said, equity indices, my primary focus is on market cycle seasonality and valuation versus the interest rates. If I'm undervalued or overvalued versus the interest rates. But if I look at gold or euro dollar, I would focus on the COT index first, right? At the retail behavior. And by the way, this is not sentiment. It's they're literally positioning in the market, right? Positions in the market. Smart money, the commercials and the producers versus the retail behavior. And then I would go to valuation. And for instance, if I look at the euro dollar, I would look at the valuation versus the dollar or versus gold, right? And see if we're undervalued versus gold and versus the dollar or overvalued. And then only then I would look at market cycles, at seasonality, for instance. So how I look at things differs depending on market, if this makes sense.
Okay, so let's say we've come into your tool and it's taking all of this information to derive your graphic representation, and it's just happening to say euro dollar is going to be extremely bullish. It's the best opportunity for this week out of all of the reports you have. Now we decide this week we should be coming to euro dollar because my tool, based on economic data, has told me this is the best opportunity. What would that data look like before we decide how to technically enter? What would that data look like for euro dollar to be bullish? How would that present in your reports?
Actually,
just so people that don't have a tool, they can start to see, okay, I need to look for, in the COT, I need to look for this.
Yeah, that's very interesting, because I could make even a live call, trade idea live call, not a real trade idea, but I can tell that this year the dollar is going to be extremely bullish. So because the dollar is just an index, and the biggest market in that index is the euro dollar. So obviously the euro dollar is going to be bearish, right? So, but the dollar is going to be very bullish this year. How can I tell? Because the retail positions are almost at all-time short. So the retailer are positioned almost all-time short on the dollar index. What does it tell me? Retailers are always wrong. If they are not only a little bit short, and not only if they are all time basically short, it's the best indicator to know that dollar gonna rally like crazy this year. Whenever this is gonna happen, I cannot tell yet. Okay. But what I'm going to do then is basically, okay, I'm looking at valuation versus dollar versus gold and dollar versus the euro, for instance. And look, once we are undervalued, plus at the seasonality of the dollar, if then all stars are aligned, then I'm like, perfect, right? So I see already the retailers are super bullish, bearish, all-time low bearish. Then I'm looking at valuation, I'm waiting for the dollar undervalued versus the euro and versus gold ideally, maybe even versus interest rates, versus all the three markets. And then I'm looking at seasonality, where I can literally time, okay, that's from a seasonal perspective, the low is next week. And then I know all my stars are aligned, so all rules are met. And then I go to step 2 where I time the market, and that's how I can make these bold predictions to say this is going to happen.
Yeah,
and
which
be
you have done, yeah.
Which I've done before.
So the I like your term all stars aligned. The way I kind of say is A plus setup.
Yeah, it's the same
your
thing.
all
Yeah.
stars aligned on a currency pair is going to be your positions in the retail perspective.
Retail,
it's going
yeah.
to be your seasonality and valuation.
Exactly, perfect.
Once you've got the best all stars aligned for that, then as you said, I know it's going to be bullish this year. I just don't know when. So now you need to come into a technical base to decide when is right to enter. So let's say your leading indicator on Sunday has told you this all stars have aligned. Now you come into the market. What is your process now from Monday until you actually take an entry because then it will all be technicals.
Yes, and it's all be technicals. Then I
let's
would
get
look at
through that.
supply and demand. I would start with the weekly time frame. Look where I've. So let's assume now I'm bullish on the dollar, right? So I'm looking where do I find close by weekly demand, right? So this is I call it big brother small brother principle. So the small brother has to be covered by the big brother. So the weekly is the big brother because the big brother is kind of helping for the price to move, right? But I'm not timing the big brother because the weekly zone is not giving me the risk to reward proposition that I want to have, right? But I want the smaller time frame, the lower time frame, so the weekly is the higher time frame, the lower time frame, which is then the daily, so I move from weekly to daily, which is then my execution time frame. So, but the daily,
Excuse on the daily.
yes,
Not 4 hour, 1 hour or anything.
nah,
Wow. Okay.
nah, daily. Also, yes, because of the risk profile that I have now, right?
So your average stop is a daily demand or daily supply.
demand zone, yes.
That can be on, let's say, euro dollar, like 30, 40 pips. Let's say.
I have no idea because I never look at the pips or the points. I just look at the zone, right? I know I look at the demand zone. I know, okay, this is where I want price to, where I want place my entry, and this is where I want to place my stop loss. And that's it. And then the area, right? The gap, right? From entry to stop loss, that's my risk profile. In that case, if we talk about a $1 million account, the $10,000, regardless of pips. If it's like 50 pips, 60 pips, 100 pips, I don't care.
Put a position size accordingly. And when it comes to your profit taking or position, because you mentioned that it's going to be bullish. So just as much as you don't know when it's ready to enter, maybe it's hard to tell when it's time to exit. So do you exit based upon a fixed R profile, or is it based on a technical structural high, or is it just you hold it into your fundamentals
shift? Yeah.
Interesting.
Until
so your trade longevity or trade duration, let's say, is unconfirmed when you enter. It just depends on how it goes.
So for beginners, I would always use technicals to place the target as well. For instance, if you enter in weekly or daily demand, you would exit or put your target at the opposing supply zone, right? The next daily or weekly supply zone, because this is where you would expect your price to go move from one area to another area.
Just to clarify that, let's say you're just having basic market structure, bullish, you've entered on a demand. So then you would hold that to go to the last higher high or keep going to then a higher time frame supply.
Exactly, to a higher time frame supply.
Okay, so you'd have a higher high for sure on a
that's
bullish,
what I would expect. Yeah, if there's no always the next, basically always the opposing zone would be like where I would technically expect price to go.
What are you doing on your personal? Are you doing the technical, or are you just waiting for your fundamental
That's
drivers?
why I say, like, for a beginner, I would use technicals because it's more objective. It's easier to do. But for me, more experience, I check the fundamentals and wait for them to shift, and then I can also get out. Right?
Okay, and when you're doing that, because then for me, like, little alarm bells can go off. For example, first of all, your psychology of if you're holding a trade and you don't know how long, you're just waiting for things to shift, but then it's made the new high. You're now, you're significantly in profit. You've had a strong move.
Yeah.
How do you manage the emotions knowing that I'm not targeting the supply zone? I'm just going to hold and hold and hold until the market fundamentally tells me it's going to change. Does that affect your mind, or you just
well, I had to learn this.
Okay.
I had to learn this and to digest these swings from a P&L perspective. So how I learned this and what rules I put in place is I'm not looking at my MT5 anymore. Well, the only thing that I do is literally I place the trade. Once I get triggered, I just look that I literally got triggered. Everything is fine. My stop loss is in place. And then I switch off. Right. Okay. So even my MT5 app on my mobile, I've hidden somewhere very, very deep in a folder structure that I not just randomly click on it. I'm not throughout the week. I'm not clicking on it because it's really different. And I have to admit, it's really for me as well, because I constantly try to scale my funds now, right? So now I'm trading 4 million in prop firm capital, which is like, if I take 1% of risk, is $40,000 risk per trade. If I can trade that market on all prop firms, basically, but it's $40,000 risk per trade. So of course, if it goes up like a 1 to 2 and you're in profit $80,000, and then it gets another retracement back down, and all of a sudden it like cuts in half, and you would look at that P&L constantly, it would like, it drives you, that roller coaster, it's not healthy, you know, that roller coaster lifestyle, looking at your P&L going up and down, for nobody in the world it's healthy. And this is where when you start acting emotionally in the market, and you then prematurely close your position, move your stop loss, do this and that. It's not analytical mindset anymore, it's the emotional mindset that acts.
So when, let's say, just to run a hypothetical, let's say you entered and your fundamental bias was correct, your technical entry was great, you're in profit now, and you've passed a swing higher high. So you're now greatly in profit, you're just targeting a supply. Now price is entering towards that supply, but your fundamental indicator or driving tool has told you don't exit yet. Are you going to take money off the table, or do you take partials along the way, or do you just hold until the fundamentals tell you?
I've also seen that you take partials, right? Do you have multiple targets? I think
I have fixed partials, two zones, simply because, and I can explain briefly. I didn't want to have this emotionality. So I used to be quite a swing trader, and I just had these things of like, I would be greatly in profit, and then a healthy retracement of 50%, you'd feel it.
You feel it, yes.
And when you're doing decent risk to reward, it's just hard to stomach. And what I also realized is there's opportunities to re-enter. So I completely optimized my system for just session volatility. If I can just know where the session is going to go, not the rest of the day, week or month, just the session on GU, which is about 30, 40 pips a London session or London Open. If I can just get an entry with, it's going to sound foreign to you, with a 3 to 7 pip point stop loss, and I know London session is going to be 30 pips on average, if I can just optimize for that, I can kind of be in and out in the session. And then I kind of optimize my profit taking, not subjectively based on structural lows or anything. It was just 1 to 3 and 1 to 10, and I cut it. And that was based on my data. When I took a sample size of 1,000 trades, it just told me the optimal place to take my partials based on my strategy and edge was these 2 points. So you're now doing like a subjective approach based on what your indicator is telling you.
Actually, it's still objective, I would say, because
the tool tells you.
Yeah, the tool is really objective. It's not like me eyeballing. I think it's really objective. Like I see when it, like from, again, it looks like for instance valuation, right? It looks literally like an RSI overvalued. It's like how do you call it on an RSI? Overbought, oversold. Oversold. I don't even know, right? Overbought, undersold. So it looks literally like, so if for instance, if I trade CFD stocks, if I enter the market and if I'm undervalued, I would get out if I'm overvalued, because this is when I would expect price to drop.
And how often is that indicator updating, or like new information comes
daily.
in and moves? As a daily report?
It's daily. It's daily. So 2 of these tools are daily, and our Smart Money Index, which is derived from the CUT index, basically, is weekly.
So did you intentionally transition, and probably because it was more profitable for you, transition away from taking profits based on technicals to now taking profit based on fundamentals?
Yes.
Did that improve your profitability? Or was there another reason of
big
psychology?
Big time.
Oh, yeah.
Because if you are, because as I said, fundamentals drive price, and you can really catch the market turns. The fundamental market terms, the big market turns, the weekly market turns. If you catch these market terms, price can go almost forever in the because you catch the new trend at the bottom or at the top, basically. And then if I got out on these trades on the next opposing zone, I would miss out on a lot of profit potential.
And when it comes to your position size, let's say you've risked $10,000 on a trade, and is there any way you're going to take, let's say, $5,000 of risk off?
No, it's always all or nothing.
Oh, wow.
That's how I learned.
Why?
I learned.
Well, because of I used to do something similar, and I realized that if it doesn't reach my final target, but I was up a decent amount and it came back to break even, it's all or nothing. Yes, so I didn't lose anything, but I kind of valued the opportunity cost of I was up 15,000, and that 15,000 came back to break even. That was kind of money lost as I viewed it.
I fully understand you, and I fully get you. But based on because in the very beginning I was also I was journaling and logging all the trades, and I always had, for me, what is really important when it comes to logging, I always had a imaginary target where I was like, I take a conservative target, but also a target where I just put a line in, and I said, okay, this is where I think price could go based on my tools. And based on my sample size, literally most of the times, price went to I think price will go there target, right? So because then I saw, okay, I can trust that system, so I'll change my approach from conservative target to that's where I think price can go, quote unquote think, right?
Just for a bit of clarity on my end, let's say your final destination or your average winning trade, which goes to your preferred zone, how many R is that based on your risk?
Well, it can be between 1 to 1 and 1 to 4. But imagine there's a daily zone, sometimes even a weekly zone. If I cannot refine it, if it's hard to, if I, for instance, what I would consider daily level on top of level, if you have very like
alignments,
two daily demand zones that are close by, like one below, and you basically don't know where price is going to stop or turn. Is it the first level or is it the level below? And then I say, I just don't know. Right, I would just combine both levels. So basically, I would sacrifice. I would basically then sacrifice on risk to reward, but increase the probability of getting filled and being in that trade, and also increase the probability of not getting stopped out.
Yes. You give yourself a healthy buffer.
Exactly.
Okay. So on that one, let's say your preferred zone is the 1 to 4. It's one of your better scenarios, and price goes to 1 to 3.
Yes.
So your 3 are up, and then it goes back to your break even.
This doesn't happen. No. Then I would know. I mean,
you would see it in your indicator.
Then I would at least, I trail along the way. Like I would not.
Are you trailing stop? Okay,
I would not. Well, I mean, it could happen obviously that I'm up then 30,000, and then price goes back, and I'm only taking 15K, right, or half of it. But this happens. Obviously, this happens. But yes, but I would trade. I would never let. And this would be bad. This would be bad money management, right? Because I would be a bad risk manager if I'm $30,000 in profit and then I let it go back to break even, or even some traders would let it go back in because they don't want to be wrong and they think I'm now right. This is like the mental trap. They would even lose then. No, this is not happening. Then I would be a bad risk manager.
Right? The reason I ask is because my biggest growth in my 7 years of trading is the last 2 or 3. And the last 2 or 3, I didn't have to modify too much my strategy. I just have to optimize in certain ways. And when I started to optimize, I didn't have to change my edge. I didn't have to change my technicals. I didn't have to change really anything. It was just I had to improve my money management. And that's why I ask, because I felt in my system, one of my biggest inefficiencies was not my win rates, not the losses I was taking. It was the profits I didn't actualize. So that's why I was kind of focusing on that. So your approach is
for me was the opposite. For me was the opposite. Basically, I took profits too early because I didn't let it run through. And still, the previous trade I had was on Walmart. It was like a CFD stock, right?
Yes.
I took it on all prop firm accounts. When I look at how far it went, actually, now after I took profits, I was like, beep, right? I could have held that trade much longer, right? But I went out because fundamentals told me to go out. I was overvalued, which was the best way. But then I saw price railing further, and I was like,
But
it's what it is. That's also trading, by the way, that kind of, I don't know how you feel about it, but I'm like, in general, I'm a perfectionist, and I'm kind of never really happy. You either take profits too early or you take profits too, you're kind of never really happy with what you achieve. Somehow in the moment, you're like, okay, I took profits, great. But afterwards, if you cross-check the chart and if you look where price went or what you could have done better, you're like, maybe here, maybe there.
I have a few mantras or sayings that I repeat to myself all the time that give me this level of comfort that I have reassurance. And I'd be interested if you have any of your own, but one of my strong ones for that exact issue is, I always say to myself, a restricted trader is a profitable trader. Meaning, we've been vlogging this week with the boys, and as you know, I've been giving signals on Twitter for this is the 11th week.
That's great, yes.
So I've been there was position today and position yesterday. Both of them were like tick, 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 tick. Good setup, 1x. But that 1x is an important cross. It's an invalidation criteria. And in the end, both trades played to my full target.
But you didn't take it
and
because
I didn't take
of that 1x?
And I even gave ahead of time, I'm waiting for this, but I'm not going to take it because of this. And it still played. Now,
That's great. No.
when people saw that on Twitter, they were like, I took it anyway, la, la, la.
Yeah.
And as I said, look, a restricted trader is a profitable trader.
Yeah.
I didn't take it, not because I didn't feel like it. It was, I had something that invalidated it. And today it was correct, but tomorrow it could be wrong. Day after it could be wrong.
Yeah.
It was there to protect us. So I've always just been comfortable knowing that my protection mechanisms, even if you took partial, but it kept going, it's fine. A restricted trader is a profitable trader.
No.
Do you have any in your head of like important cornerstones or ways to ground yourself, sayings, let's say, that you're telling yourself?
No, I think but I can fully relate to that, and I have a similar approach. Obviously, for me, it's like people, or like I had to learn, or everyone has to learn, not to be in a position. I think it's more difficult.
Yeah.
I think it's more difficult not to be in a trade versus to be in a trade. You always want to feel that kind of adrenaline kick. Right.
Okay, so I want to ask about that because for me, I have 2 currency pairs and that's all I'm looking at. So I have my key time windows and I have my 2 pairs and I have my technical reasons. And because I'm trading on the lower time frame and so forth, I can have 5 opportunities a week, which is quite a lot, I'd say. But on your perspective, you have any asset class from stocks to commodities and so forth. And I'm sure there's times where you have an abundance of opportunities where a lot of your fundamental leading indicators are saying opportunity on these 10. How do you
Not really, actually, because my rules are so strict
it's
that
really
that
specific.
super specific that all stars align trade. You find sometimes there are like 2 weeks where you don't find a trade because they're so specific.
You're used to sitting
so
without
if you look at and I've showed you, by the way, right? My FX book verification in the last 6 months on that $1 million account, I didn't have a loser, right?
Yeah, which surprised
me.
It was
my worst trade, and I'll post it as well, and I can show the screenshot. Everything, it's like $50, right? Was my worst trade, so it was a break even trade. So my criteria, it was so super strict that it's actually hard to find a trade.
Okay,
but for me, I feel just better being right versus like that 1 off, 1 on, 1 off, 2 off, 1 on. It's just for me, it just makes me personally feel better with my trading, and that's why I just made it so super strict that it's really quote unquote difficult to find a trade, but still you find, like, because we have so many markets to look at, 1 trade, 2 trades per week on average, that when all stars are aligned, we're going to take the trade no matter what. But therefore we have to we cannot just look at, I could not just look at euro, dollar and British pound dollar, because then I would find a trade maybe
Rarely,
2 or 3 times a year.
Okay, so this is interesting. I mean, and correct me if I've analyzed it correctly. I am looking at 2 currency pairs, so my asset selection is low, but my win rate is also low. So therefore, I don't need that many stars to align. I need my stars to align, which is probably not as tight or restricted as your ones. So therefore I can still play the positive risk reward game with a lower win rate, 50%. Whereas it seems like your win rate is rather high. Where would it be, roughly 80, 70?
Well, yes, like around that.
Okay, so when you have a high win rate and you have a decent risk reward, but you're still maintaining good trade frequency, once a week on average, is that recuperated by having the ability to look at everything?
Yes.
And that's how you're balancing it?
That's how I'm balancing
so
it. Otherwise, I could not balance it, obviously.
Why do you not, just for the sake of argument, because you're doing a positive risk reward, 1 to 3, 1 to 2, and so forth, why not allow yourself to have a slightly lower win rate, controlled, to have, let's say, around the 60%, 70%, and have further trade frequency with a good risk reward to then kind of improve your equity curve?
It doesn't improve. Actually, I tried this before. Like, this is like of course, this is like how I evolve as a trader, right? I tried like all these scenarios, and I feel like now this is the, like, for me personally, almost the end game. So where I like feel like super confident, right? Where there's hardly anything skill wise to improve, where it's just about letting your trade sometimes play out a little bit better and so on and so forth. And but and of course the mental side of things, that is always, you always have to improve as a trader, or like you always work on as a trader, because the more we scale up, the more risk we take. It's always a new game, right? Because we have to get mentally used to these bigger numbers, right? So
is your goal to then continue kind of dominating the prop firm space and scaling with not just FTMO but other props and getting millions under management, or is that not your vision?
Yes and no. I have a clear vision, and I can also state that vision. I want to be the first 8-digit FX prop trader under management, managing 10 million. But I don't want to do this with B-book prop firms. We didn't now have that discussion because we talked so much about strategy, the nitty-gritty of strategy, and we lost ourselves a little bit there. But since I manage 4 million, 2 million is A-book, 2 million is B-book, So the A-book real money, B-book demo accounts, right? The demo accounts, the B-book is not sustainable for my growth because I'm trading big capital and I'm getting payout after payout after payout on a monthly base. So this is not really sustainable, not for the prop firms, and then in this case, not for me,
model, yes,
for that prop firm model. So I would like to scale on an A-book side, of course, more. I'm focusing more on the A-book. Look, I could now go out, buy $4 million worth of challenges and do that, right? But the point is, like, half of these prop firms, sorry to say, they will not pay me out at the end of the day, most likely.
Have you ever had an issue with the payouts before, with the B-book prop firms?
I didn't have an issue, but nowadays, since I have also a follower base on subscribers on YouTube, 20K, they behave, but they approached me as well, and we discussed. I told you that story where prop firms asking me for affiliate, and I'm not saying I'm not doing any kind of affiliate. I don't need affiliate, but I can give me your highest allocation challenge, and I do that challenge live on YouTube. Do these challenge documentary. I've done this before for True Forex funds and Funded Next. I can do that, and then they are saying yes, but do you actually, after that you pass the challenge, do you expect a payout? And I'm like,
what kind of question is
that? But and I get this, or they're asking this question, or they're telling me, well, we cannot max allocate you, but we can give you a 50K account.
Basically,
I'm sorry, I don't want to be arrogant, but 50K account doesn't mean a lot to me personally,
It's cool to see that the prop firms are fearing you, that they're like, we'll give you an account, but are you going to make profit?
Yeah, exactly.
It shows also
that's why I say it's not sustainable for me, right? People don't have to worry who are trading small accounts, and it's like they don't have to worry with this. But trader who are consistent, like you, for instance, and you can get money, you can generate income monthly with a max allocation account. That's where you get dangerous for prop firms, for some of them, right? I don't want to generalize, but for some of smaller prop firms, where prop firms are one-man show, a lot of these prop firms are one-man show basically. So
it's a big liability to have a very profitable
yes,
trader.
Exactly.
When it comes to your, therefore, allocation targets, majority will be then A-book, I guess.
I hope. Yeah, that's my goal. At least I'm trying.
So the cap in, I'd say, the prop firm space, I don't think I've seen anyone go beyond like $6 million. That's when you take every single prop firm and then max allocate and then even scale a little bit. What's kind of the upside or on the A-book? How much funding could you actually get? And what are the conditions like?
That depends on my investors, right? On investors in general. There's actually, I cannot announce it yet, but there's another prop firm who will maybe issue me another $1 million
in A-book.
In A-book,
cool,
yes,
cool.
I'm in discussion right now. But the conditions and this is basically the condition to basically scale in A-book. You have to show consistency. You cannot be like that. You have to be slow risk, and basically trade like a hedge fund, right? Trade like a fund, responsibly, small risk. They don't want, like these A-book investors, they don't want me to trade on a 1 minute chart. They don't want me to lose 10K, 20K within a minute, right? They want to have that slow growth, that slow price movement where you execute on daily, weekly, and they're okay with that, and then show consistency over a couple of months. And this is where then they feel confident also, if you have the track record, if you have that kind of trading style, that they give you these A-book allocations, right?
Do you feel like when it gets to the A-book investors and therefore it's real money and it's high net worth individuals and so forth, do you feel like there's a lot changing in the trading psychology, the type of executions you want to trade, the performance type you want to have, because they prefer not necessarily the upside, they prefer how much downside is there. They'd rather preserve their capital than really hugely gain. So when you are navigating an A-book, whereas in the B-book you have a reset, not really that many conditions, and do whatever you like.
You can do whatever you like. Nobody worries.
Do you feel like it's therefore a kind of a limitation for you, or is a great scenario, a great environment for yourself?
No, it's a great environment for myself, because then I can be like this role model to my students, where I can showcase consistency and see, hey, if you're consistent over a long period of time, investors come to you. They want you to trade big funds, right? Because they can benefit from that as well.
So I want to dig into this question from a technical perspective. I know you know technical analysis, and in your earlier days you were also learning a lot about it.
Actually, when I started off, like in my first 6 months, I was also trading 2-minute time frame, because that's to be fair, for me, that's the best way to get immediate response, right, to learn as well, because you get direct feedback. You get direct feedback from the market, whereas swing trading, there's like that feedback might take a long time and people don't have that patience yet, and this patience you learn. But yeah, it's a great way to learn as well. These time, and I started, learning on these time frames as well.
Yeah.
Understanding
So,
price movement.
Yeah, the lower time frame M1 specifically is in my opinion, is like so necessary from the way I look at the market, is because there has so many fine details in there. And just yesterday, the signal that I spoke about in the vlog, which failed, it was in a daily demand area. So a lot of people could have positioned themselves in that daily area and had huge upside targets. But the M1 revealed to me it was not ready and it was going to fail. So just noticing these details in the M1 protected me from a potential loss. And not only that, the analogy I give is you can watch a movie in 360p and you still see the movie. You can also watch it in 4K and see all these little details. But there's way more clarity and detail in this one, which is why I've preferred it. And also, I'm aware that you have a technical base. You can go down to the lower time frame, not necessarily M1 because of the investors, but you can go down to the H1 or the M15. Why do you just choose to not bother? Maybe you could get a sharper entry, more precision, maybe time it better. Why do you just choose to stick with the daily?
That's exactly the problem, right? Where you have to find that fine line between they don't want you. Well, I don't want to get stopped out on a trade, so for me personally, right, and also for my investors, you rather take
high win rate setups,
high win rate setups, and the risk is for me always the same. It's like on a $1 million account, it's 10K, right? Whether I'm going to execute that on a 240-minute chart, whether I would execute that on a 60-minute chart, whether I would execute that on a daily chart. So my risk profile is always the same, but the zone gets smaller, so the likelihood of getting stopped out is bigger. Whereas I rather than say, okay, for me and my investors, the likelihood of getting stopped out should be lower and the win rate should be higher, and it still moves my way, if this makes sense.
Got it. Well, Ben, I think we're definitely going to have to do a part 2 because there's so
part
many
3,
details. And I enjoy speaking to you.
Me too, same. I really enjoy it.
Because you have a high level of knowledge, expertise. And I'm growing, but I feel like I've got enough knowledge where we can have a healthy debate and a discussion.
100%. And I love the discussion with somebody professionally like you.
Thank you. So I want to kind of end off the podcast with, we talked about the technical stuff and so forth, but my observation on you as a man and your journey and your life that you've created for yourself, it's very aspirational because you have a lot of time freedom. You have a level of financial and geographical freedom, which is strong pillars of freedom. But then also you're a family man. You're also helping people. Yeah. So it's like, I think it's the role model image that you had, that you want to be, not only from your trading, but also from your life. And I think it's important when someone looks up to someone, it's not just what they've achieved, but what kind of a man and what kind of a life they have, because they both go hand in hand.
I appreciate
you can be
that,
fully into just financial pursuits and let your family go, let your health go, and so forth. But it feels like you're balancing everything.
It was always my goal from the very beginning. That's why I have this slogan, motto, set and forget and get a life, right? When it comes to trading, set and forget and get a life, right? For me, that balance and to have like
so talk to me about that, because after watching a few of your vlogs,
I only have 2, unfortunately. I'm not as extrovert as you, but this is something I have to learn, and this is why YouTube is so great for me, because I'm really an introvert person, and I envy you, like how you were like an extrovert person, and I really would be like at some point also like more extrovert. But I think YouTube and social media is helping me to get more extrovert.
Well, it'll come to your surprise. When I was a kid, I was super shy. I was super nervous, super introverted. And I think through doing and being out there,
it's just learning. It's just learning. Yes, it's a skill. It's a skill as well.
So just want to touch on what does your life look like? Because I know you're building a project in Koh Samui.
Yes.
You have your villa here in Dubai. So what's like a normal week look like of a real trader, let's say, that's doing it for over a decade and created almost a desirable life?
It's actually
what does
quite.
That look like?
It's quite boring, to be honest. So it's quite boring. So my mornings, I get up quite early, 6:30, because my daughter has to go to school. So we're all getting up at the same time, right? It's getting loud in the house, and but at 8, I'm leaving the house. I go to the gym. I do Muay Thai, and this is my morning. I need that me time. That's that's important. I can work on anything like project related, my own business related for like 10, 12 hours. I don't mind, but I need every day. I need that me time for me. That's what I need, right? So in the morning, I'm like 2 hours in the gym, doing some Muay Thai, doing some normal conditioning work, gym work. So gym is part of my lifestyle. It made me what I am today. I really believe that, right? In terms of consistency, in terms of dedication, motivation, everything, right? Discipline as well. Like gym made me what I am today. I firmly believe that. And then I go, because we have an office in Business Bay, actually in the Opus. This is where we have where we have Online Trading Campus, our licensed investment consultancy, where we offer education. So, but the team is located there. Some of the team. Well, I like to work from home, to be honest. I like to be close to my family. My daughter comes back from school between 2 and 4 p.m. So I actually like to be at home when my daughter comes at home. To spend also some time. We do some homework and stuff together. I do that, the math and stuff. It's getting already third class, already difficult for me, No, like super boring family life. And then I handle obviously our licensed investment consultancy. I handle projects like that Koh Samui project, that building that villa on Koh Samui, in Koh Samui.
On the beachfront.
On the beachfront. It looks.
Yeah.
Thank you. Yeah, I always post the progress on social media. So yeah, like these basic things, and then my trading, our academy, right? So it's just these things, and this is my life basically, and I'm super comfortable and super happy with that life, that I have that freedom basically to do whatever I want to do, right? So that time freedom is like for me everything, right? Because I come from the corporate space, I know how hard it is, that 9 to 5 grind and not being flexible. And it's something that I basically were able to accomplish, not to have anymore. And I always wanted to accomplish that, and this was like my main goal, and I accomplished that, and everything else is icing on the cake. Yeah.
Well, I want to end then with a dangerous question. And
Yes, please.
Hopefully you can give me an answer, because you mentioned the Muay Thai, and you are, a man in shape. You can fight. I've seen your leg kicks and stuff. You're a dangerous.
I'm still an amateur. Oh my
No, but
gosh, right? Horrible.
Compared to the other people in the space, you're probably right up there. So I'm sure you may have come across the influencer boxing, like KSI and all these.
No.
They do like an influencer boxing.
No.
Whereas these different YouTubers, they just settle their drama or whatever. They just
No,
do a boxing
never,
fight.
never, no.
Okay, let's say
Okay.
one day there's a trading influencer. Now that you are becoming one, boxing.
Yeah.
Would you participate? And if you did, who would you challenge?
Oh.
It's a dangerous question. I need an answer.
Oh, that's a dangerous question.
I know in my mind who you're going to say. I just want to see if you'll say it.
Well, no. I'm not sure if you know who, and I'm not going to say the guy who faked my payout certificate. Actually, I would not challenge. Like, it's hard. I would only challenge somebody who has at least 1 million under management and at least like have some payout certificates, because otherwise, as you know, it's not worth my time, because everybody calls themselves, can call themselves a trader at the end of the day, right? So no, but if I had to challenge somebody, I would challenge the founder of ICT.
There we go. Let's make that happen. Eh?
That's going to be the beginning of the podcast to get people watch it.
Well, Bernd, thank you very much.
Thank you, Mark. No, the pleasure is mine.
We'll connect again more.
Thank you.
Thank you
so much. Thank you.
Brilliant.